In this video, we're going to be looking at how to unfuck your trading with this simple trading process, right? So we are going to be taking a look at how you can use the primary sequence and the secondary sequence to generate a trading model. So this will be the only trading strategy that you'll need, right? And this would be something that is a one size fits all because you have your own entry method, you have your own thing, whatever. This is giving you a framework of understanding market cycles, right? So first of all, before we continue, there's going to be a surprise towards the end. And yeah, let's continue. All right. So, in order to unfuck your trading, in order to make something of this trading model, it will be important for you to employ patience. Okay. Psychology is really important. You need to be able to execute by saying, if I see this, I will do that. And once that happens, I will do this. Okay. Because more often than not, when you don't follow the rules, when you just mindlessly execute, you will see that you're going to end up with a lot of regrets. Oh, what if I did this? What if I did that? So you can see the most common recurring pattern of a thought process is what if I did that? Yeah. So if you employ conditional thinking, if you employ algorithmic thinking, it gets easier because by saying it or by thinking in a certain way, you are able to control your actions. Okay. That is how you build discipline. And in general, that is how discipline is built. Okay. So the process. Now, you have to wait for the golden time range. Now, what is the golden time range? The golden time range is when the buy model or sell model is supposed to happen for the day. Yeah. And in that time range, if you were watching the earlier videos, the last two videos, you will see that we need some form of an inducement, right? We need some SNR inducement. We need maybe a trend line inducement. For example, this is SNR inducement, and this is trend line inducement, like so, right? Those are some of the things that you will know by the courses that you have done, by the YouTube videos that you have watched. So I will leave that inducement part up to you. Alternatively, you can definitely join the Trade Easy program and make use of our statistics and make use of our algorithms to actually, take a proper trade without needing to rely on something as subjective as this. You can use it as confluence, but I would prefer if the trader is using something that's objective, something that can be measured. Because that is what everyone is looking for, right? I mean, if you're looking to trade properly, you're looking to trade in such a way that you are able to have a repeatable process every single day, which will give you a likely outcome that is positive with a positive expectancy, right? Now, after the algorithm gives you a buy or sell signal, I will get to a case study, don't worry. You're going to be waiting for a volume spike. Now, as you know, when we talk about volume spike, if price is going down and if the volume just increases, that is telling me that this is some form of institutional accumulation. Therefore, it is manipulation. So I can use an IFEG, inverse fair value gap, and I can buy. That is a change in the state of delivery through an inverse fair value gap formation, which is the only form of a change in the state of delivery within the scope of ICT concepts that actually makes sense and that actually consistently works, right? Alternatively, you can make use of my CSD candle, okay? High, high, high drop, CSD candle, buy. Low, low, low rally, CSD candle. So you can use that. No harm in doing that. And then you enter. Put your stop loss and you put your take profit. Now, your take profit, if you are in the Trade Easy program, you have the statistical levels for take profit, which will make your trading insanely easy and which will also give you a statistically proven level that price is always going to hit. It's as simple as that. So, the additional tools for all of this is in the Trade Easy program. You can definitely use the link in the description below, right? You're going to get the Black Friday discount, and those links are going to be deleted in December, right? The Black Friday link will be deleted in December. So in case I forget, you have all the opportunity to come and use the Black Friday discount, which will lock in 60% off of a lifetime. Basically, you'll be locking in 60% off for life, right? $40 for life. That's all. Before it goes to $100 from January 2025. right? So I will really recommend that you get this. You will definitely see the allure of this in when we look at the case study. All right. Now, this is the surprise, the London sequence, right? When you anchor this to London, now I'm going to have a completely separate video for that. So this is just to show you like a preview, right? You can see that we have a low. This is sequence what? Sequence one. We have a low, price retraces, price initiates a buy model, and then price does nothing. Meaning, yeah, sure, it expands one more time, but you don't want to enter that. So this is your golden time range. Yeah, that's where you're going to get the best possible entry with almost no drawdown. That is the secret sauce. All right. So let's take a look at the live charts to show you exactly what I mean by this. All right. So let's take a look. Today, forget today. Let's go yesterday. So yesterday on gold, here's what we have, right? So let's look at this properly. Here's what we have. What we have is replay mode, London. Okay, London. All right. What we'll do is we will divide the day up to get our sequence. That's the second step. Okay. And the essential first step for the model or the strategy is we're waiting for the time of day. Okay. Now, where over here was there a retracement? We did not find a retracement. So having a buy model is unlikely. We're going to have a sell model. Sell model up until what point? Let's see. Here. Here. Why? That's liquidity, trendline liquidity. That's some form of inducement that we need to see happen, right? We're looking for a sell model. Now watch. There we go. There. Done. Right? Perfect. Now, this sell model over here, if you go and check out the entry algorithm, right? Look at this. Look at literally how perfect this is, right? So forget the buy. We know that the retracement is going to be a sell, obviously. And take a look at this. Like, what the hell? Like, look at this here. It's calling the tops, literally calling the top. You can sell each and every one of these candles all the way over here. You can sell that shit. It is as simple as that, right? Now, let's take it one step further, okay? One step further. And let's look at this from a statistical perspective. Now, from a statistical perspective, the high of London is going to happen around 5 or 6 o'clock. 5 or 6 a.m. Eastern Standard Time, which it did. You can use that information to go and sell. Wow. Okay. Now, let's take it from another statistical perspective that is based on the levels, right? So if you look at the levels and look at this from the perspective of midnight stats, all right, here we can see that the midnight open is somewhere here. Price rallied into the manipulation level, and that's your sell. Wow. Wow. Okay, let's look at a live example. All right, let's take a look at a live example. So on live price action, if you go to Bitcoin, we are in Bitcoin longs, right? What's the deal? What's the deal over here? Here's the deal, right? Check this out. We have a low formation. We have the retracement. We have the buy model. Wow. Wow. Okay, now that's sequence one intraday, right? Now, what if we look at this from a session-based perspective, right? If you take a look at this from a session-based perspective, just take a look at this. Sequence what? Sequence two, right? Look, engineer liquidity, low formation, IFVG on the lower time frame, buy. Or IFVG over here, buy. Volume spike, look, price is going down, volume is increasing. That's also there. What's step one? Wait for the golden time range here. Okay. Step two, wait for the volume spike. Okay. Step three, inverse fair value gap to see a proper change in the state of delivery. Got it. It's a 10 out of 10 trade, which is why it's working out perfectly. And again, guess what? Look at this. Look at this and look at this close, right? What's this dotted line over here? Statistical manipulation level for Bitcoin today on a Friday. Look at that sensitivity. Okay, that's that. Now let's take a look at the bias. What is the bias? Yeah, what is the bias for Bitcoin? Oh, daily bias bullish. So I don't know how else to convince you, but this is literally alpha. Alpha. If you get this, your trading is going to 10x immediately. If not immediately, then give it a week. Your trading is going to go up. Like, fuck all this candle counting bullshit because that's bullshit. That is coincidental. And if I were to debunk it and if I were to put a video on that, showing the actual process of debunking this, ooh, I'm going to damage a lot of people's reputation. So, if you do want a video on me debunking candle counting, please comment it down below. All right. Now, for the rest of you guys, the Black Friday discount is ending in 3 days or 4 days, right? So December 1st, it's gone. Be sure to get it. The link is down in the description below. Once you get it, do send me a message on Telegram. I'll hook you up immediately. And let's simply make money. Let's make money together. And if you found this insightful, I'll see you in the next one. Please do like, comment, and subscribe. We want to try to push these videos out as much as possible so that everyone learns the truth of how price moves and just so that no one falls into the trap of bullshit information being spread online. All right, so with that said, I'll see you in the next one. Good luck and good trading. Bye bye. And again, remember one thing, the main point for today's lesson was the golden time range. It happens every single day, every single session, every single hour. Okay, bye bye. Love you.